All right, this quarter's earnings season, most anticipated earnings release is out. Nvidia reported quarterly financial results that are sending the stock price down roughly 1% in the aftermarket hours following the earnings release. In this video, I'm going to talk about the company's revenue growth, of course. I'm also going to touch on the company's profit margin expansion and discuss the latest, newest generation technology, the Blackwell. Progress on that front, the company did highlight what they expect from the Blackwell technology sales, not only in the next quarter, but over the next year. And we're going to talk about the guidance the company gave for the next quarter. We're going to discuss all of that in this brief video here, so let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so like I mentioned in the beginning of the video, Nvidia's share price trading down roughly 1% following this announcement. And I wouldn't take too much out of this price action following the earnings release. The conference call hasn't been held yet, and it's likely that what will be said in the conference call will also add some volatility to the stock price. So when you're seeing this video tomorrow morning, the price action is likely to be different than where it is right now, the immediate reaction following the earnings release, while the stock market participants are still digesting these results, awaiting the conference call to get more detail on the company's prospects. So revenue exceeded expectations. The company delivered $35 billion in revenue. Phenomenal growth continues for Nvidia. That was up 94% year over year and up 17% from the previous quarter. Management told investors that the third quarter revenue would be $32.5 billion. So they actually delivered revenue that was $2.5 billion better than what they were forecasting. And this has been an ongoing trend with Nvidia for, it seems like, 8 quarters now, where the company forecasts excellent growth and then goes ahead and beats those growth forecasts by several billions of dollars. It's been incredible what Nvidia has been achieving lately. For a business of this size and this scale to continue growing in this rate is truly unprecedented, and they continue to deliver phenomenal performance. And it's especially more impressive if you look at the profitability. Operating income came in at $21.9 billion. That was up by 110% year over year. If you take the operating income and you divide by the revenue, 21 billion, or let's say 22 billion divided by 35 billion, you get an operating profit margin close to 60%, which is very impressive for a company of this size and the type of products it sells. When you compare the percentage of hardware versus software that generates sales for Nvidia, a company that generates this much sales from hardware to generate this level of an operating profit margin is unprecedented. Usually companies with operating profit margins this high are software companies, companies that generate significant sales from non-physical products, digital products. You're talking about software, tech, digital, streaming, maybe anything, but not hardware, because it's difficult to generate these kinds of profit margins on hardware products, because with each product that you sell, there's an associated cost of goods sold with each product that you sell. And so to generate these kinds of profit margins, you have to be able to sell your products at a premium price. And the only way you can get a premium price of that high a magnitude on your products is to have a truly phenomenal product that beats the competition exponentially and still delivers great value for the customers that you're selling to. And that's been the story I've been hearing with Nvidia. The major customers for Nvidia are the large cloud providers. These are Microsoft, Amazon, Alphabet, Meta Platforms, etc. Large tech companies that utilize Nvidia's GPUs to optimize their data centers for artificial intelligence. And what I've heard from those companies that Nvidia is selling to is that they will keep spending tens of billions of dollars on Nvidia's products because they say that the return on investment is great. It's excellent. And so they'll keep spending even though Nvidia is generating these great margins. The return on investment for those companies are still great. So there's so much margin to be had, so much profit to be made here from artificial intelligence that there's room for several companies to benefit from this trend. And it all goes back to the rising effectiveness here in different ways that it's being utilized. It's not just large language models like ChatGPT, it's recommender systems like the one on YouTube that surfaces content for you to watch. If Alphabet shows you content that you're more likely to watch, they're going to make more money. And so they're going to be more interested in fixing that algorithm, making it more effective. And as long as they continue to do that, they'll continue to optimize these data centers. Speaking of data centers, Nvidia is kind enough to give us a breakdown of their revenue by the market platform, and the data center, unsurprisingly, is driving the growth. $31 billion in revenue from Nvidia's data center business out of the total $35 billion in revenue they generated in the quarter, and that was up by 112% year over year. This growth is likely to persist for at least another 4 quarters, perhaps even 8 quarters at least of revenue at this level. And I say that because I've been following those large cap tech companies that are the big customers for Nvidia. And what they've been telling investors like myself is that they're going to continue spending tens of billions of dollars. And so as long as they keep saying that they're going to spend tens of billions of dollars, the vast majority of that money is going to go to Nvidia. And so they keep forecasting that Nvidia keeps benefiting and they keep suggesting that their revenue growth will continue. Interestingly, the automotive segment is the one that I've also been watching closely with Nvidia because I see this as the next growth driver for the company. This isn't going to be in the next 4 quarters or probably not even in the next 8 quarters, but maybe 12 quarters later or 16 quarters later, 3 or 4 years later, this automotive segment is going to be that next driver for Nvidia. This was up 72% year over year to 449 million. You can see it's still a small fraction of the business overall, but it's growing rapidly. And this is where they generate sales from driverless car technology. All of these companies, including Tesla, that want to have driverless car technology, need NVIDIA's accelerated computing platforms to develop those technologies. You need a lot of computing power to have self-driving cars. And so right now, self-driving cars, not a reality. For the most part, there are some in some cities, like here in Los Angeles. Waymo is growing in popularity. And then you've got San Francisco that's also growing in popularity for driverless cars. And then it's really growing vastly quicker in China than it is here in the United States. But in the next 3 to 5 years, you can see more driverless cars in more cities around the world. This doesn't have to be Tesla. I know you've been noticing Tesla just keeps delaying their rollout of this technology, but you've got other companies like Waymo, like Zoox, and others that are already on the road with driverless cars. And their success is going really well. So they continue expanding. And I wouldn't be surprised if 3 years from now, 5 years from now, this automotive segment is a several billion-dollar segment for Nvidia. So management said that the strong growth is driven by demand for their Hopper computing platform for training and inferencing large language models, recommendation engines, and generative AI. Cloud service providers now represent 50% of their data center revenue. This was up from around 40% earlier in the year. So these large cloud providers, like I mentioned earlier, are buying more and more of NVIDIA's products. They completed, they said, a mask change for their next generation Blackwell technology that improved production yields, and Blackwell shipments are expected to begin in the fourth quarter of this year. For them, it's fiscal year 2025. For us, it's the next quarter, and will continue to ramp into fiscal year 2026. They expect to sell both Hopper and Blackwell systems, and they're both supply constrained. Demand for Blackwell is expected to exceed supply for at least several quarters in 2026. And I wouldn't be surprised if that goes well beyond that. So, music to investors' ears. We have new technology that's coming out. Our revenue is growing by 100% quarterly. And guess what? Supply is still not enough to meet the demand. Meaning, if they had enough demand, their revenue would have grown by even more than 100%. And so they're selling pretty much everything that they can create right now. And they expect that to continue for at least several quarters more. Man, this is truly impressive here. I can't think of another example of a company that's demonstrated this kind of growth at this scale. I just can't think of any examples of this kind of performance. Automotive revenues was a record, up 72%. And I talked about this. This was driven by their self-driving platforms. And this is a segment to look out for if you're worried about this data center revenue. It's going to go on for, let's say, another 2 or 3 years maybe before the rates of growth really slow down. In 2 to 3 years, that's when the driverless car technology could really be gaining steam. And this segment could be that next driver that lifts Nvidia forward in those years. Cash flow from operations came in at 17.6 billion. That was up from 7.3 billion a year ago. So they more than doubled their cash flow from operations. They're using the vast majority of that to buy back their own shares. They bought $11 billion of Nvidia stock in the latest quarter. Looking ahead, they expect the good times to continue. Revenue of 37.5 billion expected for the next quarter. That's again a quarterly increase of several $billion. Interesting note here, they do expect gross profit margins to edge down slightly from around 75% to around 73%. And that's most likely due to the Blackwell technology starting to ship out. And the early units are not as high profit margin because they're not selling in large quantities just yet. But next year, when they start to ramp up production, I fully expect those profit margins to return to growth because, like they said, it's sold out. So they're going to be able to sell them at premium prices, super premium prices, to generate these higher profit margins. All right, checking in on the price action again. Nvidia stock is now down just 0.25% following the company's earnings release. As I've went through those earnings results, the company's stock price hasn't been all that volatile. Surprising that post earnings, the stock price is moving less than 1 percentage point up or down. That's usually not the case here. Earnings releases typically generate strong volatility. So Nvidia is now trading at a forward price to earnings of 34.6. And I've talked about Nvidia stock all year long. I've had it rated as one of my favorite stocks, one of my top stocks to buy. I've had it as a top 10 growth stock rated and a top 25 stock to buy. And I'm going to reiterate that recommendation today. Following these earnings results, I don't see any reason to downgrade Nvidia stock. In fact, following these earnings results, I like Nvidia stock more than I did coming into these earnings results. So the company improved significantly across the board here. Revenue, profit margins, cash flow from operations, the forecast for Blackwell technology still exceeding supply, still not enough to meet demand. So they're still sold out. All of that is great news. So I would reiterate this. I still think Nvidia is a great stock to buy. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.